And I'd like to invite the panelists up for our next session, which is, it's titled The Newer India Towards Equity and Sustainability. Could I please invite Prachi Mishra, please, from Goldman Sachs, and Mr. Hemant Kanoria from Shrey Infrastructure Finance, and Mr. Sanjay Jha, please, from the Indian National Congress.
Thank you. Nice meeting you.
Really nice to meet you. So we've got an interesting, and I hope, lively discussion coming. I think we're going to talk really very broadly about the Indian economy. That's what we'll do. I mean, we're not going to limit ourselves to anything, and I hope everyone feels comfortable with being outspoken and addressing some of the questions that we have right now. We all know that India is in a slightly difficult moment. Personally, I'm not worried about India's future. I think India will do just fine. But there is we are in a slightly difficult chapter right now in terms of the economy. I think I'd like to encourage you to discuss with each other, not just respond to my questions, and we'll also be opening up to the audience. But before we actually get into our discussion, I'd like to invite the audience, if you would, to answer using your apps, a polling question. Do we have that up on the screen? I think we wanted to ask the audience to respond to what they think the top economic reforms should be. Or rather, I'll rephrase the question. The question is, there we are, it's over here, okay. Yeah, our live poll. What are your top 3 concerns today? Is it lack of employment opportunities, income gap between the rich and poor, air pollution, environmental degradation in general, vested interests and corruption, rising prices, divergence in healthcare outcomes, the brain drain, or the inefficient court system? We'd appreciate it if you'd signal your answers on the apps, and we'll be looking at those answers when we get to the end of the session. I'll just start off by asking Mr. Jha to begin with. I know you're going to be feisty today, which is great. And I just wanted to ask you point blank, has the India story fizzled, would you say, right now?
Yeah, I think if you look at the last 5 years, Max, you'll find that despite having a very strong tailwinds of a government with a brutal majority in parliament, which hadn't happened for 3 decades earlier, and coalitions in India are generally very fragile. So you had a brutal majority for Mr. Modi's government. You had oil prices that was scraping at $28 a barrel. A reasonably prosperous global economy. So you had these tailwinds, and you find right now that India's GDP, the last one that was declared, was at 5% for the quarter of April to June. I mean, it's clearly catastrophic collapse. And I would call it as, the missed, lost half decade. 5 years for a country with 300 billion people at the fringe of poverty. If the GDP growth slumps down, you're actually going to aggravate the inequality, which I notice is one of the issues we're going to discuss today. So you have, frankly speaking, unless I want to be politically incorrect here, if you look at the situation today in India, jobs is an epic crisis at the moment. It's at a 45-year high. The GDP, of course, as we all know, is struggling. It's wobbly. The last results were the 6-year low. And these are hard data that cannot be, kind of brushed away with rhetoric or some headline hunting statement like the finance minister made yesterday. But let me try and answer that as well. She yesterday attacked Dr. Raghuram Rajan, the former RBI governor, who was, by the way, whose term was not renewed by this government. She attacked Dr. Manmohan Singh, saying that the NPAs were terrible during the time of the UPA, and she's only doing the cleaning the debris, which again is disingenuous. It's a distortion. It's full of mendacity. Because the truth is, and I have the numbers on that, I just debated it yesterday, that the NPAs as percentage of the gross advances were 3.8% in 2014 when Mr. Modi's government came to power. And by March 2019, it was as high as 11.2. So, I mean, how can you just keep blaming the previous government? I mean, the 5 years they have basically failed in creating jobs. Rural distress is a big issue. And I want to add one point here. I'm sure we'll have a lot of time to talk about it. My biggest concern, Max, has been that India, under Mr. Modi's government, has become so opaque that I don't think anybody believes that the data that you get from the government has the credibility which should be attached with any official statistics which is put out. So India's GDP is being questioned. India's unemployment figures were actually kept under the cupboard until the elections got over. I mean, you got doyens of industry here, and you got Hemant here to talk about the infrastructure issues. But the fact is that if gross fixed capital formation, which is what the new capital we create, was as high as 34% in 2011-12, it may have been on account of irrational exuberance of that time, but for that to slip to 27% now, I mean, if we are not going to be alarmed at this point, then we are living in total denial. So whether it is jobs, agriculture, rural distress, and the failure of this government to see the writing on the wall. I mean, I honestly feel that you can do the headline hunting and do the PR and the propaganda, but the fact that India had a twin balance sheet problem with the corporates and the banks, the banks problem, especially the public sector banks, and as far as the corporates were concerned, who were very highly leveraged, this was something that was elementary to even an undergraduate student. So I think the government has frankly blown away an opportunity, and I don't want to sound alarmist, but I believe this government does not have the wherewithal. It lacks a vision, it doesn't have a strategy, and I think honestly it spends a lot of its time in, it's basically fudging data and trying to appear like, hey, we are hunky-dory and everything is cool. It's not.
Thanks very much. That's punchy as I could have hoped for. Prachi Mishra, would you like to respond a bit, and also to perhaps explain from your perspective as a sort of technical economist where you think things have gone astray? I mean, why are investment numbers declining so much? What is this credit collapse that we've seen in the last half? The first half of this fiscal year saw a stunning drop in the amount of credit going out. How do you explain it?
Thanks, Max. First of all, pleasure to be here. So let me just give you a little bit of background on what has happened to the Indian economy over the last several years. I mean, clearly, I think economic growth is slowing. Just to put the numbers in perspective, if you look at FY17, for example, and now FY20, our growth forecast is 6%, with risks perhaps to the downside. It's almost about a 200 basis point reduction in economic growth. That's
2%.
That's 2 percentage points.
2 percentage points,
yeah,
right.
2 percentage
Just
points
for
reduction. Even if we look, even if we look at our GS, Goldman has its. We monitor economic activity at a very high frequency. So if we look at our GS India CAI current activity indicator, that's been consistently slowing since early 2018, and we've been pointing it out in different reports. So I think clearly, there is an economic slowdown. Number one. Number two? What are the drivers? I think investment and exports have been slowing for a while. If you compare, average investment between, say, FY 2005 to 2011 and 2012 to 2019, I think it's gone down from like mid-teens to low single digits, both investment and exports. Net exports have been less of a drag because exports have slowed, but imports also have slowed. So net exports have been less of a drag. What is more worrying is the consumption slowdown, which in our analysis, we dated to January 2018, before some of the NBFC issues started to surface. So clearly it predates, this recent slowdown episode predates the NBFC crisis against common perception. And I think we did very deep research comparing this episode to previous 4 slowdown episodes. So we have a report which is titled, "This Episode is Different." So so this episode is turning out to be very protracted. If you look at some of the earlier episodes like demonetization or global financial crisis, it's very much V-shaped. This is already been 20 months since the slowdown started, so very protracted.
Perhaps if I don't want to interrupt, I just want to ask for a little more detail.
Right.
I mean, so why has consumption slowed down?
Right.
I mean, what is the driver of that particular thing?
Right.
Because I mean, there's some statistics. I mean, the statistics, we do have a problem in India,
Right.
but there are statistics that came out quite recently from the NSSO, I think, the National Statistics. I can't even remember what it stands for, but which showed that actual consumption has actually been flat basically since 2014.
Right.
So even before this decline, that it actually 2014 to 18 it was virtually flat.
Right. Right.
And what's the cause of that?
Right. So again, I think we've done research on what's causing this slowdown. Again, against common perception, it's not one single factor. It's a plethora of factors which compounded and complemented each other. So clearly, I think global factors are important. Our current activity index, the decline in the current activity index in this episode, about 40% is due to global factors or a decline in or a slowing of India's trading partners' growth. Second, I think if you look at consumption in particular, 1/3 of the decline in the GS India current activity indicator in this slowdown episode is actually driven by a sharp decline in consumer confidence, 30% of it. And third, I think everyone knows, I think funding constraints are important. They have been an important contributor to explain this slowdown. So just to highlight this point, that look, there's not one factor, it's a combination of factors which have been working in the same direction rather than offsetting each other to counter the slowdown.
Thanks very much. And Hemant, if I could turn to you, how are you feeling this in your business? I mean, I presume you're doing wonderfully well, but I mean, how are you actually? What are your own sort of sensors out there aside from the statistical things that we hear in your own business? What are you seeing right now?
Yeah. Good morning, ladies and gentlemen, and thanks, Max, for inviting me here. I think that basically, if you look at it, we are in the infrastructure sector and also in the financing sector. So therefore, we can see the pain which in both the sectors are there all over the country. And I think that it is very important from the industry, if you look at it, that the political parties, whether it be Congress or it be BJP, whoever is in power, they have to now look at it that economy should not be messed around with the political urgencies which they have. So what happened that, India was doing well, even after 2008, and I must compliment the Congress government that after the Lehman crisis, and we were a witness to the infrastructure sector and the financial sector, the way with maturity, the entire economy was put on track very fast by 2009 to 2010, compliments to them. But then after that, in 2011-12 onwards, they allowed it to slip with the 2G scam, with the coal scam. And actually, if you look at it, in hindsight, these scams were not as large as it was projected. So therefore, if someone was not going right on putting down the figures, then the government in control should have exercised their authority in snubbing those things down because it caused huge damage. And with the 2G scam and the coal scam, all the international investors ran away. Because people who had invested in the country with the confidence that the country would be doing well, so they got scared. And they said, what's happening? It seems to be a big mess. And people had, in 2G and in the coal power industry, people had invested overseas and invested billions of dollars. And everything was just put into the waste paper basket on one fine morning. Similarly, what has happened is that there has been a drive of NPL. And that drive started off, I think
non-performing loans, you mean?
Non-performing loans
right.
by the banks.
Yeah.
Now, there is almost a crusade by everyone that everything should be shown as a non-performing loan. So therefore, if a person has a pain in the stomach, he is straight away put into the ICU. And after the ICU, they will cut out his stomach and see that what it is there. It may be just a small pain. A small medicine can just put it right. But you can't just have every parameter saying that, if the diagnosis said the person has this much of blood pressure should be there, and if this blood pressure is not there on a clinical assessment, then he's put into the hospital and then taken to the ICU, and then a surgery is done on him. That's not the right way of looking at it, because we must understand that India is a developing economy. It's not, we cannot compare it with the US and say that everything is working perfect. In the infrastructure sector, we have seen that it started all with the construction companies, with the contractors, with the infrastructure players, because they were not able to get their payments on time from the state government, from the central government, from the principals where they were operating. So they had no other option but to default or delay in their payments. And therefore, you can't start putting everyone into an NPL. So there has to be a distinction between the consumer loans which are being given and loans which are being given against assets which have been created. On an asset, you can do a stress test and then provide for the NPLs according to the stress. Because if a building is non-operating for about 2 years or 2 months, you can't say that the building has to be now written off. It's an asset which has been created. Someone else may come in and take it and do the best about it. So you change the person who's operating it. You don't provide for that asset as an NPL. And that is what has been the biggest crisis. So therefore, all the banks were forced, because there were certain parameters which were laid down, and all the banks were forced that everything should be an NPL. And then when it becomes an NPL, so people do not want to take decisions, so everyone gets scared. And then we have investigating institutions which are coming in. They don't understand that whether it was a genuine loan or not. So therefore, they think that everything should be seen suspiciously, and therefore, then the inquiries start against those particular people. So what has happened is that the government has a very good intention. Even the Congress government had with this NPL, I think it was not practical. So what my suggestion, and from the industry what we see, is that practical decisions are very important. It cannot be just based on economic theories and say, this we are going to implement, because each country is different. Here we have a country which is almost like a continent. It is like Europe. So each state is very different, with the different languages, different culture. There may be different political parties. Now, we have the same political party in many of the states. But nevertheless, I think that it is very important to take practical views to things. So what has happened is that employment is not getting generated. Entrepreneurs have become very scared. So people do not want to take risks. They don't want to make investments. The bankers have become very scared because they don't want to lend. Because they feel if they lend, there will be some mistakes, and there is no room for making any error. Because if you make a mistake, you are behind bars. And mistakes will happen. And businesses will fail. It is a part of the business model. That every business will not be successful always, because there will be disruptions in the business. So people may have genuine intentions. And after that also the businesses may fail. But if they apprehend that because of the failure of the businesses, they will be put into jail. So people are not going to take decisions. So what has happened now is that the government has done very well in the last 5 years by introducing the IBC code, the Insolvency and Bankruptcy Code. The GST has been introduced. It could have been implemented much better, but always there's always scope for improvements. Then we have had this Jan Dhan accounts which has been opened. The government has come out with the health insurance scheme for people. So these are all very, very good steps. But where the economy is concerned, I think a practical view has to be taken instead of everything being put down and taken from the textbooks and implemented. Because I don't think so that it's going to work out. And that is what from the industry, and especially in both in the financial sector and in the infrastructure sector, we have witnessed. Like NBFC, you see in the last 1 year, there's been a mess. Because first of all, ILFS should not have been allowed to collapse. Because it was the government's responsibility. The main shareholders were LIC, SBI, and Central Bank. And they knew that the model which they were having.
This is back in October 2018, a year ago, yeah.
Exactly. September last year.
September.
And basically, they were borrowing money by way of debt and investing in equity. So as it is, the model was not correct. So the shareholders should have looked at it and said that, okay, either we are going to support this model or not going to support the model. So if the model intrinsically was not correct, then you either don't have that model, or you take that commitment that we are going to support because it is required for the growth of the country. You want to have infrastructure projects, and this is the model that we are going to follow to implement it. But all of a sudden, if you just leave it in a lurch, so it has created a chaos with the NBFC sector.
It created a wave that just rippled across the whole
Exactly.
The sector,
so now people have lost confidence in the NBFC sector, and everything is on confidence. So let's suppose if a bank if there's a run on the bank, the RBI or the government, even in the Lehman days, The government, ultimately, the US government had to step in, because if there was a run on all the banks, it would have created a loss of confidence which would have created a chaos.
And step in at the right point, because the government will argue that they've bailed out public sector banks, they've actually thrown money at things, but maybe not at the right inflection point.
So I think that is exactly what for the NBFC sector. So what is required now, the loss of confidence which has happened, and the NBFC sectors play a very important role, because in the credit delivery, and especially because they are specialized institutions, whether it be in car financing or equipment financing. I'll give you an example of our company. Last 1 year, we have reduced our disbursements, and because of that, the capital goods market has crashed by 30%. The sales of construction mining equipment have dropped by 30% in the last 1 year.
Well, yeah.
Because just one institution like us, we have pulled back, because we want to now keep more liquidity for rainy days. So we said, okay, let's have liquidity, and therefore we have enough liquidity, but we are keeping it for rainy days. But we could have easily we could have continued with the disbursement. So
but
therefore,
this suggests that actually companies like yours are one of the reasons for this stopping of credit flows. I mean, put that in your list, Prachi.
Sure, Max. Let me just quickly, two points following on what Hemant said. One on foreign investment, and I've been meeting investors over the course of the year, before last year, like end of the year, before elections, immediately after elections, and now. I'm really struck by how dramatically the sentiment has been changing, for India. If going back to October, I think foreign investors in particular, very negative. I think it's that, the expectations have not been realized, etc., but very negative sentiment. Before elections, it was very interesting, the sentiment had changed, but there was a disconnect between the offshore and the onshore ones. The onshore ones were fairly negative, but the offshore ones were very positive. And come election results, of course, all investors rallied, because the magnitude of the victory and the strength of the government was stronger than anyone had anticipated. And now I think, again, the economy is sinking in to the investors' minds. And lots of questions we are getting on, what is the outlook on the economy going forward, and where is India going from here? And just to give you the numbers, if you compare, so 2019 overall in terms of foreign investment has not been bad. Actually, last 2 months have not been great, last 2 to 3 months. But so far till October, the net inflows, debt and equity combined, have actually outweighed the net outflows for 2018. 2018 was generally very negative for EMs and in particular for India. I think last 2 months, however, have been crucial. This is one point. Second point, I think, again, to follow up on Hemant on the NBFCs, clearly, I think the NBFCs have slowed. I think they were growing before the IL&FS crisis, they were growing, the lending by NBFCs was growing at 23, 24%. Now they are down to lower teens, 13, 14%, and likely to slow further. Why have they slowed? I think 3 reasons. One, clearly there's an economic slowdown, so there are few people going and asking for loans. Second, I think regulatory requirements. I think RBI, for good reasons, has come up and said that NBFCs need to have regulatory requirements compared to banks, and that means that you have less money to lend out. And third, I think, is a more, fundamental reason, which Hemant also alluded to, is more this, confidence and risk aversion issues. They're shoring up with government securities instead of going out and lending to the economy, and that has to be broken. If you look, in terms of numbers again, if you look, NBFCs are about 12 to 13% of overall system-wide credit. About 5% of that is, probably, to worrying entities, etc. So 5% of 13% is not that big a number if you look at in a systemic sense. However, this confidence and this ripple issues is what I think needs to be tackled
urgently. There's a trust problem.
Yeah.
Sanjay, if I can turn to you. I'm not quite sure what you're going to say.
Yeah.
I'll turn to you, and then perhaps we'll open up to the audience.
Okay.
Please, yeah.
Yeah, Max, taking off from what both Hemant and Prachi have mentioned, I think the one thing that everyone in the room by the end of today needs to kind of bite the bullet on is that no economic architecture or a liberal democracy can really survive if there is going to be the death of institutions. Institutions are ultimately what govern a society or an economy. Now, what we have witnessed over the last 5 years is a brazen dismantling of the very edifice of India's democracy. And I'll give you an example related to what maybe the public here is probably more deeply interested in. Let's take the case of the Reserve Bank of India. You have had eminent people, not just Dr. Raghuram Rajan, but a government-appointed Mr. Patel who quit. You had a very senior RBI officer who went public and said that, you're politically intervening and that will destroy the animal spirits of India. And end of day, I think these were large red flags. And one of the points you have mentioned here is an inefficient court system. Let me tell you, a very prominent lawyer of India went on record the other day and said that the Supreme Court of India is responsible for a lot of the industrial or the economic slowdown. And it brings me back to Hemant's point. There are a lot of allegations were made against my party when we were in government. Frankly, he mentioned 2G, which, by the way, has been rejected by the courts. But unlike UK, and every time I go to London, I love to watch BBC because it's great to hear people talk without an interruption. But Indian media is very high on steroids. And honestly, it destroyed the UPA. I'll be publicly confessing that we did not defend ourselves, maybe part of the story, but we were destroyed by a media with a clear political agenda. Having said that, that's the same media today which seems to be the best cheerleader for this government. And I'll give you an example. I believe demonetization, probably the only original decision of this government, of Mr. Modi, continues to actually slow down Indian economy today. To give you an example, today, and I'm sure Prachi will maybe want to respond to it, today I hear everywhere, everyone talking about what you raised earlier, the falling consumer demand. Basically, India never had a demand problem. India had a supply problem, but now India has a demand problem. Why is the demand problem happening? Because end of day, demonetization, which initially impacted the informal sector, is now linked to the formal sector. So you are having the entire economy pay a price. But I'm being very blunt here. I've seen some of India's most brilliant minds that I have personally admired a lot who came in after demonetization and said, black money will be obliterated from this country, and this is going to boost India's GDP by 200 basis points or 2%, whatever you choose to hear. The fact is that I think when there is this fear of a government, that you need to say some things to please the government. You had a very eminent lady who heads a biomedical firm in Bangalore who went public and said, I was told to go slow if I have to criticize the government. So, I think there are issues. I mean, I don't want to dodge them, not just because I'm from the Congress party, I'm also part of the capital world. And I do believe that as long as we keep, telling ourselves that, everything is hunky-dory and I don't have to take on the system perpetuates itself. And the best example was Nirmala Sitharaman, India's finance minister, yesterday making an extremely fragile and questionable statement on NPAs. 2.6 lakh crores in 2014. She doesn't even know that the NPAs were crossing 11 lakh crores by the time of March 2019. But these create headlines, these create debates. Sure. And my last point here will be that end of day, I think whether we like it or not, if a country of India's size, we got 250 million people living below the poverty line, 1% of India owns 60% of its wealth. Today, that inequality is hurting the real affluent India because the wages have gone in the rural sector. There is no demand. The middle class is suffering. And that inequality, as we all know, hurts growth. So inequality is hurting Indian growth. And my last point here, that Mr. Modi came in 2014 trying to please everyone that I'm going to be the free market fundamentalist. That model is, with all due respect, I believe it doesn't apply to India. And while you need free market and you need reforms and you need to back the corporate sector, the state has to have a role. You can't reduce the role of a state in welfare. You got poverty is a big issue in our country. So you need a fine combination between growth and poverty. And I think the UPA during our time reduced 276 million people, or rather got them out of the poverty trap. And the GDP growth on the older index, which by the way would be much higher today, on an average was 8%. And this was despite the fact, Max, that we had a coalition government. Oil prices were $148 a barrel. We had, frankly speaking, the great mortgage crisis and the great recession of 2007-8. We held on.
Thanks, thanks. I'd like to, we have a question from the audience that's just popped up, which is, and I'd like to turn to Hemant to address this. Simple question is, when do you see things turning around? We're in a dark spot right now. Unfortunately, the news has been all bad for the last couple of months, but when can you sense that things might turn?
So basically, I think that today there's an opportunity again because there is a lot of collapse of many of the companies which has happened. So when we are seeing the investments coming in, the FDI and the investments coming from overseas, so people are looking at these problems as opportunities because they are getting things. $1 stuff is being available at 20 to 30 cents, so who will not want to buy it? At the same time, I think it is very important that the government, and I think there is no question that this government does not have the right intent, because with the kind of mandate which they have, politically, they have the right intent that they want right things to happen for the country. At the same time, I think that somewhere on the practicality of it, we have just got lost. So therefore, that how, what approach should be taken, and practical approach to make things happen. And things can turn around very quickly. I think that we have about 13 to 14 lakh crore of NPL assets, non-performing loan, which are there with the banks. If you just take that and say, okay, now these are the problem assets which are there. How do we look at turning it around? It only requires an infusion of close to 50,000 to 1 lakh crore, and this 14 lakh crore can be put on track. So you can just imagine that the time which will be taken, the gestation period is very short. It can be implemented within a year or so. We are back to our growth rates because it will create employment. It will put these assets. You don't need fresh capital because this is already idling away. So you just need to revive it. So the courts which have to take decisions, or from the perspective also like what we do as an NBFC, we have a large number of clients. We have what 100,000 clients. So therefore, what we have done is that in many of the cases where banks have just written off that particular client, we have worked along with those clients, brought them to nurse them to health, and they are doing very well, and they are returning our money back. At the same time, if you just write them off and tell them that if someone complains of a stomachache, and if I just write them off and put them into the cemetery, it's death knell for them and for us too. So I think that those are the practical calls which has to be taken. NBFC sector has to be supported because the credit delivery which they are doing in a specialized manner is very important, as Prachi also mentioned, because, and what are the pains? It is not something which is rocket science. It's very simple decisions which has to be taken and implemented, but practical decisions. So today we are at a time where practical decisions has to be taken. Secondly, the guidelines and the tax laws get complicated every day. It seems that all the bureaucrats and the regulators, they are all working towards seeing that because if any panic has happened or any problem has happened, they will tighten up the rules further. So now it's like, you're wanting to run with shackles. And the shackles get tighter and tighter every day. So therefore you can't run. So you have to take a decision that whether you have to give the room to run or you put the shackles on. So I think that is where the rules and regulations have to be more practical.
That's a very nice image, but it's a bit disturbing. How about you, Prachi? I mean, to get back to the question about when are we going to see a turnaround, so, we've got a good answer to how.
Yeah.
But how about when?
So our forecast, Max, for FY20 is 6%, which means first quarter came in at 5%. We are expecting acceleration during the course of the year, especially during the second half. And basically, we are making two assumptions. One, financial conditions have weakened, have loosened, and are likely to loosen further. RBI has reduced interest rates by about 135 basis points since February this year. Some of it should start filtering into the economy over the next few quarters. And second, the government has announced a series of measures, including the corporate tax cut. So we are building in our forecasts some lifting of sentiment, especially in the second half of the year. Of course, as I said, risks to our growth forecasts are tilted to the downside, given the financial sector issues that still continue, particularly the confidence issues in the financial sector.
One thing that, I mean, the current moment is also, a moment of, there's a slump, but it's also a time when it catalyzes change because, it focuses minds and it might make the government more willing to do the kinds of reforms that it was not prepared to do before this crisis began to set in. Sanjay, what's your immediate prescription for what you think the government should do right now?
Well, I think the first thing is to stop doing voodoo economics. I mean, they need to stop doing things just to capture a headline, a momentary hour of glory pre-election. So I think the GST, for example, was a brilliant indirect tax reform for which we created the architecture. And they just went ahead and bulldozed it without putting it through the rigorous stress test, as Hemant was mentioning. You would have had probably less of the problems that we are facing today. Now, in terms of prescriptions, frankly, this government is not known to listen to people, Max. They don't even listen to themselves, I was told. So will they listen to a Congress spokesperson on the Economist platform?
Of course they will.
I have been told they're very busy. Let's hope they will probably find time to catch an excerpt of this conversation. I do believe that the government needs to seriously look at the issue of demand. And the corporate tax cut has definitely buoyed stock market sentiment. But the fact is, when you have capacity utilization at 75%, you worry whether that's really going to translate into more new investment, right? Because the problems are jobs. You don't have jobs, you don't have income. You don't have income, you don't get demand. There's a very straight linkages there. So I believe this government has probably missed the plot there. Maybe they could have looked at selective sectors getting their SOPs, but they should have looked at Manrega, which is one of the most important rural employment schemes, and they should have got that demand really accelerated. I would also believe that the government needs to definitely look at the twin balance sheet problem. And one of them was, for example, today the entire shadow banking problem is happening because the PSU banks are struggling. It's all linked together. So today you have the largest financial institutions in this country which are burning out. And I would believe that the government needs to be extremely transparent about it. If you can't bail some of them out, you can't bail some of them out. There is a private bank in India recently in Mumbai which has done a terrible deal, and can you imagine, one borrower has walked away with 80% of the loan portfolio. Now, these are telling you that for all the talk of trying to improve the ease of doing business, and I'm sure corporate India will agree with me, there is a lot of regulatory cholesterol in India even as we talk. And I think when a very eminent businessman commits suicide because of the fear of some kind of a retribution, it tells you that this whole tax terrorism is back on the agenda. I don't believe in any country, definitely not a democracy that so far we still are, you can really run investment or run an economy or build confidence on fear. And my last prescription to the government would be brutally transparent. I mean, if today, for example, if they choose to be delusional and say there is no unemployment crisis, they still have people who say demonetization, remove black money, there's no data, by the way. You are creating what we call as is harakiri. It's nothing short of harakiri. And I think it does a great disservice to the audience that I'm seeing here this morning, because there are people here with experience, with cerebral knowledge. There are two lovely panelists here who have spoken very candidly. And I do believe that India needs to get its robustness, and the robustness will come when we begin to call a spade a spade.
Thanks very much. I'd like to just first note that we do have answers to our question here. I'm wearing the wrong glasses and can't exactly read but we have a definite majority here. Can you read that, Sanjay?
It's air pollution and environmental degradation.
No,
That
seems to be
What solutions do you have to increase?
The concerns.
The actual concerns.
The lack of
Concerns, it is air pollution and environmental degradation. So that is the highest concern of the people, and then lack of employment opportunities, and the third one is income gap between rich and poor.
Yes. Okay, I can see it here actually.
So it's pretty equally distributed, I would
It is,
say,
yeah.
between
The top three.
Yeah.
People aren't worried about rising prices, which is understandable because inflation is rather low. So that's one problem, one thing we cannot complain about. We have time for a couple of questions. Sure, right in the front here, please. Yeah. Is there a mic that we can have? It's coming. But do you feel like shouting? No. Here we go, it's coming. It's just behind you.
Thank you. My dream, like millions of Indians, the politicians, especially in the parliament, should become statesmen. That's what we want. Now, what we've been hearing is the opposition is only opposing. Anything you do, good, bad, ugly, they're bringing it down. You can't come up by bringing people down. That's my feeling. Sanjay, you are one of the most mature and intelligent spokesmen of the Congress.
Thank you.
I expect you to give your party's vision. I mean, if you look at the freedom fighters, majority of them are from Congress.
Yeah.
Sorry, I don't want to interrupt, but we have very little time left.
Okay.
And we need to have questions.
Okay.
We've
Okay.
had, we're not going to have a political debate.
Okay, my question is it possible for you to change the narrative and give your vision, which in a little way you did, rather than criticize? A small second question. There are bad eggs in every field. This party, that party, education, etc. Why is it that all the bad eggs come from Congress? Where are the BJP bad eggs? There seems to be discrimination.
Okay.
That's for you.
Let's see if we can take one more question. We have another. Yes, gentleman behind, same table, yes, yeah.
Yeah, I just love the panelists, anyone, to give a few suggestions in terms of the direction we need to go to create new jobs or increase the pathetic situation that we find ourselves as a nation in this area of jobs. Is there any specific 1, 2, 3 pointers in which direction we need to go as a nation?
Can I ask Prachi to answer that one?
Yeah.
You've got very little time left.
I think this is a great question. I think that's what we should be debating now, that how do we, move forward. I think there is no one magic bullet. As I said, if you look at the causes of the slowdown, there's no one cause, it's a combination of factors. So I think the solution has to be a comprehensive package. I think there have been reform announcements. Some of them will filter through the economy over the course of a year or two, but I think more needs to be done. So you go one by one in terms of consumption. Why is consumption slowing? As I said, a combination of factors. I think consumer confidence needs to go up. I think, the sentiment needs to be uplifted. If you look at investment, I think, again, a combination of factors, which include, for example, funding constraints. I think the government and the RBI have announced several measures, have reduced interest rates to alleviate some of the funding constraints. They have to filter through the economy. Monetary transmission has to increase for the funding situation to improve. There are a lot of supply bottlenecks which are still throttling investment in terms of clearances, land acquisition, etc. I think all those need to be sorted out. And finally, I think exports. This is a great time. US-China trade war. It's a potential opportunity for India. So I think that for that to be harnessed, I think domestic house needs to be put in order. And I think Sanjay pointed out, if you still look at a number of manufacturing competitive indices, if you compare India to some of, particularly the Southeast Asian economies, India actually doesn't rank that high. If you look at, how China's share in global apparel has actually reduced by like 5 percentage points over the last 5 years or so. China is still the elephant, but it has lost some share. That has basically gone to countries like Sri Lanka, Bangladesh, Cambodia, Vietnam. I think has to be, the domestic house in particular, manufacturing, large-scale manufacturing has to be pushed up for India to be able to occupy some of that space. So just to summarize what I said, I think there's no one magic bullet. I think it's a comprehensive package which has to be thought through. Some of it is already happening, but more needs to happen.
Thanks very much, Praj. I'm afraid our time is up. But I know, Hemant, did you have a last word that you wanted to say?
Yeah, so
very quickly.
Very quickly, because basically just 3 things which I would say very quickly is one, that an enabling environment for the entrepreneurs and business people needs to be created where tax laws and regulations are concerned. The second is that we have a huge amount of NPL of 14 lakh crores, so we should see that how do we address it and put it back on track. And third is that the financial institutions, the banks and the NBFC should be encouraged and should get whatever support it is required so that credit delivery to the system can start.
And Sanjay, I'll give you 3 sentences because we're really over time.
All right.
If you can manage.
Yeah,
that's a
I will
challenge.
do that. I will do that. In fact, to answer, he asked me the question on the Congress vision.
That's one sentence.
The Congress liberalized India. The Congress is very pro-reforms. The Congress is pro-industry and business. The Congress also believes, and I need to make this point, that before we live in an economy, we live in a society. And therefore, let us not ignore things like the Global Hunger Index. Let us not ignore the 22% people who live below the poverty line. Let us not ignore the Human Development Index on education and health. Let us not ignore the gender disparity index in our country. Let us not ignore environmental degradation that happens. And therefore, we believe it's a larger ecosystem that needs to come into play. And this needs to happen in a secular, and I say this with a lot of pride, a secular, liberal, tolerant democracy. I only point to him on the jobs part because that's what we debate all the time. Simple one, Prachi and I think Hemant have already mentioned their points. We need to focus on manufacturing because that's where the maximum jobs are. India's become younger, the demographics, people are aspirational. Manufacturing, services can't handle everybody. You need to get down to manufacturing, the MSME sector. And secondly, and my last point, Max, I can see you're pointing out your hand in vigorous protest, is the fact that agriculture needs to be modernized. That's where the bulk of India lives. Thank you very much.
Thanks very much, Sandeep.
Thanks.